Hey, what's up, everybody? Hopefully, everybody had a great week, and hopefully, you guys are ready for this week, right? Last week, we had a lot of good stuff happening, and I really do hope that you guys were able to catch some of those plays, some of the swing plays. And I'm just going to do a quick recap on some of the things that we went over last week, and just to show you guys how great and important it is to, follow through with some of the alerts and the system that we provide for you, right? But before we get to that recap, I really just want to talk about RTY. RTY was one of the biggest ones that we had in the watch list, and this was the one that was highlighted the most. One, because we did have a pattern. Two, because it's one of the futures that has been lagging behind /ES and NQ. While ES and NQ are making all-time highs, IWM basically consolidated for like a whole year almost. And now we have the excuse, we have the good volume, the pattern, and the all-time high breakout for IWM. So with this being said, you guys got to remember one thing about this that's very important. The longer we consolidate, the better it is. Two, we have a pattern on a weekly time frame, a bigger time frame. The bigger the time frame, the bigger the move. The longer the consolidation, the bigger the move. So we have two major excuses, three with the pattern, and that we have a reason to go long and to continue to go long. Now, looking at the 4-hour, I'm going to show you this staircase pattern. The breakout was right here around this 23, right here. Oh, let me delete that. All the way to that, like the 23.20 for those who wanted to take safer entries. This was a breakout. It broke the trend line. It broke everything with confirmation, with good volume in the green market. With that being said, we have a nice staircase pattern that's being created. If you don't know what it is, we actually do have a video on what a staircase pattern is and how something should be traded. Okay. Now, this top one is not made yet. But look at this. Here's your rally, base, and then we have another rally, and then we have the base. So I don't know what's going to bring tomorrow. I don't know how it's going to trade. I don't know if it's just going to keep on shooting up or maybe consolidate here in these levels, whichever one comes first is okay, because it's still a staircase pattern, and I'm still buying on the red candles, and I'm still selling into strength once we push up. So look out for this staircase pattern to continue. And then also want to remind you that on the weekly time frame, because it's such a bigger breakout, some of the stuff that you want to look for is for a pullback. The pullback can be to 24 or 23.60, depending on where we go. If we can hold 23.60, we should be able to go long on a continued basis for the rest of the year. I say for the rest of the year because it's a bigger range, and it's a bigger time frame. So looking above 24.50, you want to look for 25, 25.50, and then 26. Above 26, 26.50, and then 27. So I have a target of 26, at least my shorter term. And then I have a target of 27 to 28. And those would be extra, but I really do have a shorter term target of 26. Hopefully by this week, who knows, we might have a nice red pullback. If we do get that red pullback, I'm definitely going to look to buy the dip down here to retest this all-time high, okay? So that's that. And then the other one was Jets. Jets was the other one that created this nice little pattern here. It landed right at demand. I said that this was right here on Friday, actually closed right at the bottom on Friday. And then Monday, Tuesday, Wednesday, Thursday, Friday, we just blew through the roof. So the demand held, and we actually broke through that base right here, which is the 23.50, and this thing ran basically almost to the top. So the target is going to still be at this 25.20. Once we can continue up, airlines are still going to continue to keep on trending up on the larger time frames, and let me show you why. Look at this base that's created, and the way that it's strongly confirmed now. This huge base here, it's finally breaking above. It's nice bullish candle above. So I'm going to be continuing to trade all airlines to the top side. I want to see a trend. If RTY can continue to the top side, it could bring in some good sentiment for the airlines, which the airlines you would be looking at RTY for some of it to continue to the top side, along with financials. So airlines have a long ways to go as well. The other ticker was DAL. That was mentioned, but I mean, when you think of jets, you think of the whole sector in general. So AAL, DAL, UAL, LUV, SAVE, and they all kind of look the same. They're all breaking out aggressively, and it's pretty awesome to see. So look for the 50% retracement. You want the 50% of that previous candle to hold and to be able to buy the dip down at those levels and then continue to the top side, okay? So look out for all those stickers. So I am still in leaps, by the way, if anybody's wondering. Yeah, so these were all great plays from last week. So BA is the other one. Yeah, BA is the other one that kind of held the demand right here, broke through some levels. So if this thing can hold just above 220 and 222.50 to 223, this thing should continue and see 230, potentially a lot more than that, just because BA is a heavier ticker and it likes to move pretty aggressive. So keep eyes on the airlines, guys. Continue to keep on trading these. Look for the levels to the top side and just to buy on red candles on the 4-hour time frame, okay? Now, Facebook is one that I do have on the list, and besides the airlines, besides BA, Facebook is another one that's been getting a lot of attention, just like we talked about last week. Last week we talked about, you know, keeping it very simple and looking for an uptrend on Facebook to continue. The uptrend, because of the metaverse, a lot of things are going on with this, and the name changes happening with Facebook. So there's a lot of media out there that's, you know, catching a lot of attention for Facebook, and the attention behind it can be good and at the same time bad, because it's going to run on hype, it's going to run on volume, and once it does that, it can have aggressive drops, which will stop a lot of you guys out and also create a fake opportunity for you to get into puts when you shouldn't be in puts. So you got to be careful on that. Facebook does have a lot of attention, so that is number one. Number two, it's changing its name. Number three, it's entering a whole new thing with stock market, right? It's just going to enter this whole metaverse thing. Now, you guys go do your research on that yourselves. I'm not here going to give you all the details on metaverse, but that's something you guys can search for, and it's a new thing that's happening. Facebook is going to benefit a lot from it, and it can benefit in the future as well. Not just the name change, but just the profitable state and the growth in the future investments for investors can be amazing. So it's something to look out for in the next couple of weeks or even just months in general. So with Facebook, what I want to point out is a support. I want to give you guys a nice support for Facebook, and I'm going to use the history right here that we have before we dropped into earnings, right? So I'm going to use this level, 339.30, and then I have this top right here of 345, right? This is like a little supply area that you want to consider waiting till we break above or below, whichever one. I am more on leaning on the bullish side, just because it does have a lot of attention behind it, and everybody's talking about Facebook. The more people you have talking about it, the better it is for people to start buying, and then this for this to lead into a back into retest these levels up here, right? So not worried about that yet, but we are down here. So with the breakout confirmation, it's going to be over that 345, all right? So over that 345, I do have my first target right here, this 354. It may seem like it's a far ways, but it's actually a perfect spot, because we've been trading at these bottom levels, and we're looking for a reversal. The reversal is almost like curling up right here after earnings, and we are over that earnings level where we kind of dropped from. And if we can continue over 345, I would for sure get in a long position Of course, take profit around 350, and then the next one around 355 area, right? Above that 355 is going to be a little more extra. So the extra piece is going to be that 360 psychological number. And that's what you want to look for Facebook, right? So if you're going to grab a swing trade on this, make sure you grab some time. We are on the 7th right now, so I would go on the trade tab. And let me just show you the contract that I would be grabbing. I would be grabbing the 26. I would go here and I would buy this 350, 345, or 340, depending on the size of account that you have, okay? Those are the contracts that I would be looking for. As long as we can break 345, my target, I'll let it ride all the way to the top in between trading some weekly contracts. So keep it very simple, guys, and make sure you set those alerts. At 340, if you want to buy the dip, you can. I think it's just more aggressive buying the dip. Just because we had a nice run, I wanted to be able to hold and break out for that continuation into that level. And then from that level, all the way down to that 360, just like that. All right, so the next one that I want to point out is CAT. This thing was on the watch list a couple weeks ago as well, and it is something that I still personally watch on a daily basis. It kind of stays here just because of the reward to the top side is amazing versus the risk is very small. The risk to the downside is very light compared to the reward to the top side. One of the things I want to point out is that the infrastructure bill has passed, okay? I don't know if it's signed yet. I don't know the full details, but please stay up to date on that news. Go search it out. The infrastructure bill is going to affect something like CAT. Now, I don't know how is it going to affect. I haven't read the full news behind it. So make sure you do your due diligence on that specific topic. What I do see with catto is that the strength of this is reclaiming its old support, right? Now, I want to point out the support right here. So we have this 205 down to this like bottom of 203, okay? You see how we trended up here? Let me just point this out, get a little closer for you guys. Right here, we reject, okay? Right here, we reject it. So we reclaim this whole area. This piece right here, these bottoms right here, okay? And then the rejection right here before that huge drop. Look what's happening now. We created a little demand right here, and we're trying to push above, and we're trying to stay on top, right? See how the rejection is still coming in, okay? What I want you guys to see is that we reclaimed this demand and we created this nice base, and then now we're fighting and struggling to break above. So with CAT and the infrastructure bill, like I said, I don't know how it's going to affect it. It may be good or bad. Whichever one comes first, I am leaning more on the bullish side. But again, I'm not biased. I am in a call position from this bottom on Friday opening, and I held some calls. And now I'm waiting for the break above this 207, okay? The 207, maybe you're wondering, like, why don't you use the wicks? Well, the 207 is more of a psychological number where we break over the candle bodies. Once we start breaking over candle bodies and we build over these wicks, my target is going to be the next actual structure. The structure where the supply actually starts again, which it starts up here in this 215 area. Watch, check this out. This top right here, this is the 215, okay? This other top right here, this is about that 213.80 area, right? So that becomes your top supply. So now I'm looking for CAT. Now I zoom out on the bigger picture and you can see it's separated. So I want to be able to go trade it from right here all the way into that 215. That's what I originally want to do, from this demand to the supply. This is from zone to zone. This is why I always say that I'm a zone trader, because I want to enter at the bottom zone and take it all the way to that top major zone. Once it becomes on the smaller time frames, they're not actual like major zones, but these are the major ones where the supply lies and where the demand sits at. So that's my purpose. That's my goal of being a zone trader. I want to take it from a demand all the way to the top of a supply, and therefore that's why I'm a swing trader. And that's why a lot of the tickers are swings. So over 207, you'll get a lot of your confirmation. Just write it this all the way to the top. If we open at 210 because of the bill, wait for that pullback, or just take it long for the gap and go, whichever one comes first. But I will for sure update early in the morning once everything happens, market opens, and then the bill comes out or whatever the case may be. So look out for CAT on that. If we do get a dip by, it'd be around 203 with the 202 stop loss. So that's a small stop loss compared to the reward that we can get on CAT. The other one is UPS. Yeah, UPS is still sitting around supply levels on the 4-hour time frame, and it does have this nice little channel. Call it a flag, whatever you want. But I do have my alerts over 211. Once I get 211, 213, 215, and then the top of 218, and then 220. But as long as this pattern can play out, it should be fine. Otherwise, below this 207, almost looking like a double bottom right here. Yeah, over I would just say 207. If it breaks 207, it'd be a short play. But otherwise, I expect this to hold right here. Doesn't have to, so just keep that in mind, right? So look for that bounce up. Along with UPS, I'm going to bring up FTX again. FTX is one ticker that I've consistently been talking about and trading to the top side. If you guys can see from this bottom of 230 down here, even from this 220, I was able to day trade this and swing trade all the way to this top, and I still been trading it since we've been talking about it, right? Because there's more rewards to the top side. So give me the more red candles. I'll look for the ones that have more red candles versus the one that have the more green candles. The pattern actually played out right here, channel, cup, whatever you want to call it, flag. It broke to the top side and confirmed, and now we're retesting this level. If we can hold 240 to 241, I still think it's a nice long play into that 250, and then the high of 254, sorry, 253.60, and then 255 would be extra. So I do have my eyes on FTX. If this thing can break 244, depending on the pre-market, and tomorrow, depending on the market sentiment, I would enter at 244 and then start to look for 250 and not worry so much about the high of yesterday. Sorry, the high of the day on Friday. But I do want to buy the dip down here with my stop loss right below. That's going to be my plan for FTX. As long as FTX and UPS can move in sync, that'll be even a lot better. All right, so PayPal. I know a lot of people out there are looking at PayPal, and let's just talk about it. I want to give my opinion. You guys can see I have tons of alerts to both and top side. Doesn't really matter where it goes. I want to mention one thing, that earnings is always a gamble. It's always a 100% gamble. You can't come on here and then say that you called an earnings gamble or a earnings play. Every trader out there has their own opinion, and they see their own value on a specific ticker. Just because we see value in something or have our own opinion, it's not going to affect the way that the stock moves. Okay. Those who do know how it's going to move are those investors pre-market, and those investors who know what the earnings are all about. We don't. If you do, good luck, congratulations, and I hope you make a killing on it. So with that being said, I do want to point out where PayPal is. PayPal is on a weekly level right now. So what I don't like about this is that we're right here below the wicks, right? Below the candle bodies. The 238 level is more of a stronger level for a call play, but down here, you're barely hanging on by a thread. We have aggressive volume that's sold into earnings, so that says something. Two, I don't know how it's going to turn out, and honestly, it's not going to affect me any way, shape, or form because I am not in this trade. I do know that it's at a weekly level, and it has potential to bounce back up without the earnings. If it didn't have the earnings, I would be looking more for a long play, just like this, and then my stop loss will literally be right there. So there would be no reason to hold this any longer than that specific level, that 225.78. So let's go look at the 4-hour time frame. Let's go see where it's at. Look at the aggressive volume that sold it all off, okay? We're going to know tomorrow where this is going to go. If this thing breaks up, okay, we will have more details on where to go long and, to look for the reversal for PayPal. I honestly do think that we could build a base, maybe kill theta here, whatever it may be. And then after that, we end up ripping to the top. But for now, I want you guys to consider a couple levels here, okay? This level here, the 238, like I mentioned, is going to be a major level. From 238 to 254.50. from 254.50, I want to take it up here to 265, and then 270, 250. Those are the levels that you should have marked to the long side, okay? So we're not going to know about this until Tuesday, and I will definitely make a post on Instagram, or just in general, I'll send it in the bot that goes out to plenty servers out there. So with PayPal, I want to take a look at V. V, same thing. It almost like had the same type of pattern, yet it's almost the opposite. This thing was at a resistance, and it actually dropped down into a weekly level. All right, the weekly level down here at like 208 and then 210. And then now what I want to look for, because PayPal has earnings, I'm not going to be trading PayPal, but I sure as heck want to trade the reversal for V. I have these two levels right here where I want to look for V to create a dip buy and then give us a nice opportunity for the reversal. Depending where we open, like I said, we don't know. If this thing breaks 217, I'm going to go long, okay? I'm going to keep it very simple. But I really do want to see a pullback. I want to see this thing retest 214 as low as 212. If this thing can just go anywhere in here, I want to be able to buy the dip and then ride this all the way back up. That's it. That's my simple plan for V. If not, I'm gonna take it long over 217, and I'm gonna trail it every dollar that it goes up. Okay, keeping it very simple with V. So kind of a sympathy play with the PayPal. You can also look at SQ and MA. I think those are great tickers to be looking at as well. SQ's at a great spot too, and it kind of just stayed flat after earnings. So SQ, the other one, MA. So MA also almost looking for that reversal as well, kind of already started. So I'm just going to reset some alerts just to make sure I catch these breakouts on top. I know it's probably too high. There's no actual setup on this, but if you want to set a dip buy alert, it'd be around 345. Yeah, around 345. So just go look at some of those tickers, guys. But V definitely is going to be on top watch for me, where I want to look for a nice dip buy for this one. So the other one that I have is J&J. All right, so J&J, what I want to do, what my game plan is going to look like, it's going to be right here. It's going to be very simple trade plan here, right? Now, zooming out on the larger time frame, we do have a lot of resistance over 166, and we do have a lot of demand right here at 162. So you can see the demand. I just point these bad boys out right here, all this demand right here, and it got bought up down here below the 160. So now we're kind of just chilling in that range, which is good. We have a lot of reward to 180. If we get there, who knows? When we'll get there, who knows? All we got to do is set those alerts and be ready. So with J&J, it's more of a slower mover. Okay, it does move with some of that vaccine news, but J&J overall is a great growth company, and I do see a lot of value in this. You just got to be a little more patient when you enter these trades, and give it some leeway. Okay, give it some room. Depending on where you entered, you want to make sure you have some time on your contracts, and they're fairly cheap. So this goes for any account size out there. Okay, I want to buy J&J either over 164, or I want to buy at 162 with my stop loss right below. So I'm gonna give it a 50-cent stop loss. If you want to give it more of a room for stop loss, give it $1. Okay, so from 162 to 161, 162 to 161.50, depending on your stop loss. And then I want to ride it all the way to this 166. The 166 is going to be a new breakout level. So make sure that if you don't want to trade it down here, you set the alerts at 166. 166 will be the major breakout that'll head into that 172. Okay. Why 172, you're asking? Well, look at this. This is the level that I want to hit. Very simple. This was the level that we broke when we came down here. So once we break 166, we'll create a huge demand, and the demand is pretty big. And then it'll ride all the way to that 172. Okay. So very simple with J&J. It's a nice trade plan that you guys can follow, and definitely set those alerts. Don't miss out on J&J. All right. Now the other one is MU. MU, I actually called out a leap play. It's 75, and I got in around this 70 area. Where did I get in? Yeah, I got in right below I got in right here about below 171, 170.50. I entered MU, so I've been in this for the past 3 trading days. But anyways, we do see this nice breakout on MU. It's already breaking right above. So over 73, it will continue. And then 75 will continue the trend change for the pattern here. So this is what I'm looking for. I see a lot of value in MU. There is a lot of resistance right here at this like 75 to 73. So you just got to be careful when trading this ticker, just because it's on a bigger time frame, it's still coming down. So there's still a lot of value for this, guys. Make sure you guys buy on some red candles down here at like 71 to 72. Great dip buy opportunity. If it drops to 70, I'd probably go a lot heavier, just because it's a nice demand based on this piece over here. But either way, I still see a lot of upside potential for MU, and some leap plays would be pretty amazing. Only if you see value in this ticker. But I do have 75 calls all the way to March or April, I believe it was. And I think I'm currently up about 30 to 40% about there. But again, it doesn't matter percentage of profits, just matters that you're able to catch the trade and understand the trade and what you see value in, right, as a trader. So look out for MU, guys. A lot of resistance at 74.50 to 75. If we can break those levels this week, I think it'll be a great trend change opportunity and for you guys to enter some long plays here for MU. But yeah, hopefully you guys are still bullish in the market. There's nothing wrong with the futures, nothing wrong with the momentum. RTY would be the better setup that you continue to follow. And same with earnings, and then CAT, and then Facebook. Some of these have a lot of media behind it. It's getting a lot of attention, guys. So make sure you guys are able to capture the swing trades and just day trades in general. And then go zoom out on the bigger time frame. If you see value in it, by all means, take the trade. If you don't, that's okay. You don't have to trade it, okay? So last one, just to top it off for you guys, the highlight of this week, I want to talk about a little bit about gold, right? So all those other tickers were your weekly watch list. Please see value in it. If you don't, that's okay. But gold, right? Talk about gold for a bit. Some of my past experience is that gold is a safer asset investment. And it used to almost be considered like an inverse, okay? But it's not. It used to be an inverse with SPY a long time ago, before like this new generation started coming in and trading on Webull, Robinhood, and like this new the COVID, where everybody started coming in and trading. Gold was a safer asset, guys, when I first started trading. And the way that I say that is because when SPY was green, gold was red. When SPY was red, gold was green. And that's how a lot of people considered it, as a inverse. And that's how they would be able to tell like where the market was going. So it was almost like a leading indicator as to where you can day trade for calls and then puts or whatever you would want. Gold is still a long-term investment. It's more of a safer asset because it's gold, right? A lot of people trust and believe in gold, which in a investor's point of view. Now you guys go ahead and go do some research on that. If you don't believe what I'm saying, again, everything that we say here, you got to make sure you do your due diligence. Either way, what I see here in the value of this chart is that we've been consolidating for such a long time. And this is, again, a weekly time frame. We found a lot of support at the 1747 all the way to that 1770 area, right? And then now we broke a psychological, which is the 18, and we broke this nice little trend line, but yet we're still holding this nice range right here, okay? This is what I want to point out, the range. So that changes a little perspective, right? We did break a trend line and we did push in with some strength, and then the volume is still good. So it's still rising volume at the bottom demand levels. The target that I have is about 1900, right? Maybe you guys are wondering, well, you know, Chef, I don't trade futures. Well, that's okay, because that's why when we look at RTY, we trade IWM. When we look at /GC, we want to look at GLD. The chart on here does not matter. Let me repeat that again. The chart on here does not matter. Do not come on here and chart GLD. Go to GC and chart the future, okay? GLD follows the future. Wherever the future moves, GLD will move with it. Just like ES, you don't chart SPY. you chart ES. SPY follows ES to the T. Okay. Now, what am I going to look for here? Is I'm going to look for an entry. Okay. Now that's the weekly time frame. Now I'm going to show you the 4 hour, not the hour, 4 hour. All right. So see how we consolidated here and had a nice retest, right? The retest of this demand here, and then now we pushed into strength up, up over this 18 right here. Okay. My entry for this is going to be for GLD. Okay. But I want to enter. If it hits 18 again, I want to enter. But anywhere in here, 1810 to 1820, I am going to be in calls. Okay. Below 18, I will stop loss. Very simple, right? In this case, I'm going to be looking at GLD. I don't care much for the chart. I care about the contracts. So the contracts that I'm going to be grabbing for short-term call play is going to be this 26th November. And it's going to be the 170 all the way to, we could do 175. So 170 to 172.50 would be a little more ideal. 170 to 172.50 calls, right? If you can grab the 169.5 or the 169, even better, just to make sure you're in the money. We want to be able to catch a nice dip by depending where we open in the future, right? So all my alerts are set just so I know that it's moving, but everything that I have is going to be based on this future, okay? So it's a longer swing, guys. It's not something where you're going to enter and, you know, hope to make tons of money within just the week itself. But this is a weekly time frame, and it's a weekly entry. So we got to let the candles play out, and the target is going to be 19. I will be entering this on my Forex account as well. The Forex position will be very light, and it's just going to be maybe one lot or whatever you want to call it. I'm not here to teach you guys Forex, but definitely I'm going to look for the bigger target into the 19. Forex has no theta, so I'm able to hold just a bit longer versus the option contracts. Option contracts have theta, where they do kill you if it doesn't go your way. So gold is the weekly play of the week. I will be posting my entry and my exit when it comes into the alerts. When it plays, I will be posting in the bot at Conservative Collectors as well. If you guys are part of the servers, please join the Discord at Conservative Collectors. The link is in the bio. Look out for those plays. If not, it will definitely be posted freely for you guys here to follow through. It's going to be up to you guys to follow those levels. The 1835 level is going to be another breakout. 1850, 1860, 1870, 80, all the way into 1900. That's what you're going to look for gold for the trend to the top. So yeah, just a little background on the gold, guys. Remember, it's more of a safer asset. It's something that moves just a bit slower. It's not something that's gonna, move huge. If it does, then great. If it doesn't, then that's cool too. It's just more of a patient play for you guys to understand what gold is all about. You can go check metals, all the metals as well. They're good investments, and the good thing is that we're leaning into a new year next year, and we're heading into the last basically month of the year. And this is where people start to look for investments, into the next year. So it's a great spot to start thinking that way and think the investor mindset, not thinking about selling your profits, but think about what you're going to invest into the next year, something that can be at a great dip buy. And that's kind of like what I talked about with jets and airlines, because I don't see airlines, dropping any further anymore. This actually has a lot of room and potential growth to hit these all-time highs of 32, even make higher highs. Airlines has been beaten down so much that it's every investor knows that they're losing money, but yet airlines are not going anywhere. People still travel, people still go on vacation, people still use day-to-day basis airlines. So there's nothing to take away from this, guys. It's a great investment. It's a great dip buy opportunity for the longer game where you buy shares. I actually have DAL and AAL, and I also picked up some BA at the bottom, and I also picked up BABA, but BABA's a whole different story. But anyways, it's all a matter about what you see value in, and if you see value in, then take the trade, buy some shares, find what you feel more comfortable for yourself as a trader, and then put that into play. So execute after you see value, and then manage your risk right when you see that value in your execution. All right, so I'll leave you guys with that. I really hope you guys do see the value in gold, and hope you guys follow through with some of these trades and let us know how it goes for you. Most of these are swing trades, and you can still day trade them in between using the same proper levels. Use your pre-market levels to guide you guys. Use the market sentiment to guide you. There's a lot of tools and resources that we have provided for you guys in the recent videos. And then next week, on Wednesday, I do have a new video coming out, and it's going to be the first video of a new series for you guys. So tune into that. It's going to be more of a beginner-friendly video. So if you have experience, you don't need to go back, but always refresh your memories, right? So I'll leave you guys with that. Hopefully this list helps you guys. Remember, gold is going to be the top play of the week. We have RTY, IWM continue trending, breakout on the weekly time frame. Airlines still are hot, so we're going to look for dip buys. We're going to look for CAT, Facebook, FDX, and V and J&J for continuation plays, and also some good swing entry plays, right? So I'll see you guys on Wednesday, and then I'll see you guys next week on Sunday. Good luck. Manage your risk properly, guys, and don't pull some degenerate stuff.